You are listening to ChartingWealth.com for Friday, the 22nd of May, 2015. I am on the road recording this. I'm not in studio. There is a Comic-Con type conference near, so if you hear any background noise, I apologize, but it's more important to get this information out to you first and foremost, and that's what we're doing. Okay, we are looking at IYY. This is where we always start. It is the Total Market Index Fund. It is an ETF. As I look here at the charts, for those of you who are joining me by video, you can see the trend line and you can see the continued up movement going into 8 days. Those of you who are listening, I'll explain what we're seeing. We draw 2-day trend lines on our 2-day chart. Each candle that I'm looking at, and there are there's actually 5 candles that are moving up. The day ended, or the 2-day chart ended, with a down movement, but it has not broken through the 2-day trend line. We do have a crossover going up all the way back on the 14th of May. We have the derivative oscillator is in the positive and actually accelerated over the last 2 days. So let's break back now from the 2-day chart to the 4-hour, the half-day chart. What do we see? Well, it's interesting what we see. And again, remember the 2-day chart is 8 of these half-day or 4-hour candles. So we see actually movement up today. IYY for the day itself moved up 0.03. That's 0.03. I just realized, for those of you who are joining me by video, that I had the power really down on the screen. There wasn't a lot of brightness, so I just jacked it way up. And what we see, though, is we see continued up movement. Now, we do see on the moving average convergence divergence lines, that is what we typically call the MACD, we see a converging, that is a coming together. Now, if we have it crossover going down, of course, then we will see on the 4-hour chart a crossover on the MACD that may very well parallel the drop we are currently seeing again on the 4-hour chart in the derivative oscillator. However, for the total market, we are still in an uptrend. We are above the 2-day trend line, which I'm pointing out for those who are viewing this. And if you want to see the videos, always go to chartingwealth.com. We love those of you who listen to us on iTunes and Libsyn and such. If you want to see it, you can, but you don't have to. What you can know is that we're above the 2-day trend line, and both our 4-hour and our 2-day charts are in uptrends as per the MACD. Okay, let's go back to the 2-hour chart, and let's go to the SPY. That is the Standard & Poor's 500. It ended with an up candle for the last 2 days, and it is also crossed over. It crossed over back between the 12th and the 14th, sometime I guess around the 13th, and on the 2-day chart again. And we have the 2-day trend line. We're still above that, and the derivative oscillators in the positive. And we're not showing any converging. We're actually showing diverging. That means moving apart on the MACD. For the MACD to cross over, the blue and the red lines have to come together. We don't have that happening. That's positive. Now let's break back. And again, for the record, the SPY, that Standard & Poor's 500, is up 0.29% for the day. That's 0.29, not 29%, but 0.29. So let's go to the 4-hour chart, see what we see. Again, up movement, some up movement in the morning, and even more in the afternoon. The derivative oscillator actually ticked up a little in the afternoon, and it appears that the lines are closer, the MACD's closer than it was, say, back on the 19th, but it is, it's still looking good. So we are both up on the 4-hour and the 2-day chart on SPY. Okay, let's now go back to the 2-day chart. And let's break over to the Qs, which incidentally is up 0.52% for the day. Again, we've got like 4 candles now tied together in up movements on the MACD. On the Qs, which again is the NASDAQ 100, crossover going up on the 14th, and the derivative oscillator actually turned positive today. So we have a nice trend line that we've got 4 connections pretty much on. That is on the 2-day, and we always draw our trend lines on the 2-day primarily. We're going to go to the 4-hour, and again, nice up movement in the market this afternoon. The derivative oscillator remained about the same, NA diverging, moving apart, it appears, slightly on the MACD. That is good. So the way we end it with all of our indexes is we are up on all of them. We continue to have up movements. We continue to have positives on both the half-day and the 2-day charts. Now, we've gone back to our 2-day period that we're going to look at, and we're converting over now to gold. Look at what gold has done. Gold, the 2 days prior, broke through our 2-day trend line after we'd seen some significant up movement over between the 14th and the 18th of May. We then saw a doji form, which is basically a cross. It means that the bulls and the bears were about equal in power. What does that mean? It means indecision. And what we saw happen over the last 2 days is a downturn in gold. However, the caveat there is the downturn has still not moved anywhere out of the range that we saw between the up movement on the charts for the 18th of May. So we've not even gone below where the charts opened on the 2-day 18th of May candle. So again, there is down movement, but it is not so significant that it's actually broken through that candle on the 18th. We do see some converging coming together of the MACD. It's still positive. We do see the derivative oscillator backing down. Now, if we range back to the 4-hour chart, let's see what we see. We can see continued down movement, derivative oscillator heating up, a divergence on the down move. So it appears to be, well, again, we can't say it's gathering a lot of steam because the movement from the morning was not really down, was not any greater in the afternoon. It sort of backed up. That is, went back up again and then back down before the day ended. Gold technically was down for the day 0.34%. And again, like I said, it is hardly lower than it was when it started backing down at its low at 4 p.m. on the 19th of May. So gold is down on the 4-hour chart. It is still in an up movement on the MACD. On the 2-day chart, we're going to go back to that. Let me just give you the caveat here. When you look at what the MACD did with all of the down movements starting from the 8th of May all the way until it kicked up on the 12th, well, going on to the 14th, you can see that the MACD never crossed over. Why? This is the one problem we have with the MACD. When you have sideways movement, it's hard for the moving average convergence divergence to track that really well. It's the one failing of the MACD when you have a side slipping market, and that's what gold did. We did see gold make some substantial gains and then kick back down. It is technically, as far as the 2-day chart goes, which is the chart we primarily use, it is in an uptrend. Continue to watch it if you're in gold. If you've already been in gold and you took that nice profit all the way up to what? If you look over to the left side of the screen, if you're viewing it on video, you can see the high was 117.88, almost 118. Hopefully, if you were in gold, you got out there. If you're still holding on to gold and you want to stay in it, well, keep watching it. Again, try to make the right decisions on when and if you get out. Like I said, we're still in an up move on the MACD for the 2-day chart. The 4-hour chart's crossed over. All our indexes are up for the total market, for the Qs, which is the NASDAQ 100, and for the SPY. Hope that it helps you as you get into your investing in trades on Friday, the 22nd of May. Thank you so much for joining us. Again, go to chartingwealth.com for all of our training, all of our charts, and don't forget, at the close of the day on Friday before Monday, we put out our weekly review and forecast that so many of you wait to tune in for. Thanks so much. Hope that you end your week wonderfully with great trading and investing. Thank you so much for joining us. We always appreciate your questions, comments, and concerns. Let us hear from you. chartingwealth.com.